First of all, let me congratulate. A wonderful event. 2 साल से सब कैद थे, so everybody was raring to go. And I think a right opportune moment and the right topic, because I really like the title, Fin Next. Because FinTech, and that is going to be the next avatar of the lending business. And I think I must also compliment the organizers for keeping this session at this juncture. First of all, to keep people awake, although the RJ is very smart and vibrant, he'll ensure nobody sleeps. But I think the session topic itself is very, very interesting. And I know everybody sitting out here would have a lot of things to offer and a lot of questions. Friends, needless to say, I think let me just go back in history and give credit where it actually is due. This whole concept of co-origination, it was originally known as co-origination, later modified to be called as co-lending, was purely RBI's idea. So I think we need to give a huge round of applause to RBI first, because which came up with this concept. I remember during our discussion, as the NBFC sector, the challenge is always funds. Paisa do, although I'm from Paisalo. Paisa do, and we are always after banks. And banks have their own challenges. But both the sectors being known for the strengths, NBFCs are the good sourcers, the good connect with the customers, the borrowers, and of course known for a good collection, maintaining their excellent asset quality. But the challenge always lies on the funds, which is where the banks kick in. And it was a perfect marriage between the two. So RBI thought कि दोनों आके independently रोते हैं, let's connect them. I think that was a wonderful idea. And it has really taken off, at least conceptually. I haven't met a single person across the country, and even fortunately having worked with World Bank, people have across the board, across the world welcomed this concept. It's a unique idea, and I think going ahead, we are going to see a lot more collaborative lending happening, because we have a lot of enthusiastic NBFCs, traditional NBFCs, and the new age fintechs. And of course, banks, which have they've been there. Within banks, we now have the small finance banks and the rural banks and the local area banks, which are always there. So it has worked out well. There are challenges, but as I said, conceptually, there is a huge push from the government of India. A bit of background, with due respect, we all know public sector banks have faced challenges, especially when it came to retail lending. They have suffered in terms of the asset quality that resulted in a huge backlog of NPAs. Now that the balance sheets have been almost cleaned out, so I think this was a win-win situation for them as well. And that is where we see a lot of enthusiasm from the public sector banks. And I think, again, that much aspect part of the credit must go to the Ministry of Finance, because they are really pushing at it. I mean, I can tell you, North Block is really after the life of, and I'm sure if some of the bankers sitting here would know, there is tremendous pressure from North Block also to get aggressive. So without wasting much time, we have a very excellent, learned and a diversified panel, which includes the old age people like me and the young, vibrant fintech world. And of course, we have a very leading home finance company also. So straight, let me now jump on. So first question to all my panelists, just give an answer, short, 1 or 2 word answer. Do you think is co-lending going to be the future of lending, retail lending in India? So I'll start from my left. Just a short yes or a no.
Yeah, absolute yes.
Yep.
Absolutely yes, significantly.
I think this question has no other answer but yes.
Okay. Good to hear that.
Yeah.
Very much yes.
Yes. Bhavin? Yes. So that's going to be the future of lending. Now, we also know that when it comes to collaboration between a bank and an NBFC, traditionally we have had a model where banks used to fund NBFCs, who NBFCs then in turn on-lend to the various target sectors, including the priority sector. Now, this model of on-lending, the traditional model, versus this collaborative model of co-lending. Quick words on that. Again, now this time I'll start from Bhavin.
Sorry, can you just repeat that?
On-lending, which is bank giving funds to NBFCs, who then on-lend to the ultimate borrower. That's one arrangement, and the traditional arrangement, which has been going on for quite some time. versus this co-lending model where both come together and jointly lend the borrower? Which one do you think is going to work more in the future?
I think co-lending, traditionally, when I was working with NBFCs, we used to use the on-lending model, right? But there the control of bank in terms of what kind of customers being given these loans is much lesser, and the exposure is on the company. Here the exposure is at much granular level. So I think the possibility of success is much higher in the second model.
Okay. Your thoughts, madam?
So I think my perspective is that, while on-lending does, reduce the operational hassles, and it makes a lot of sense to just borrow money and lend, so then you don't have to really worry about getting the partnership right and all the other things that come along in setting up a right co-lending structure. But I think that's not scalable for NBFCs. You have to maintain a certain debt equity ratio, and, you need to capitalize the NBFC. So,
Yes, interesting point. So
definitely
you
needs
see
to.
scalability, if you look at
Then co-lending is.
co-lending, not on-lending. Okay. Your thoughts, sir?
Yeah. So I think although yes, what we are saying is right, that co-lending is the way to go. But I think here there's a caution here, which I feel. The banks, when they are doing on-lending, they are being secured by the balance sheet of the organization. Today, these are being secured by the individual prospects they are onboarding. So we might have a lot of people having the access to liabilities and wanting to scale, but the experiences which the banks will get out of the eventual quality of the asset. So we can't say the only problem was not only the liquidity not being available to NBFC, it was more than that. So I think there is one side of it which it caters, but the other side is still open, and the verdict will be out after a year when they would have on-lend, do co-lending, and how the portfolio behaves. So I think we'll have to wait for a year.
So I must say I love you. Because people with you and me having grey hair would always also say that on-lending has its own advantages. I agree with you. But with due respect, I fully appreciate your views. Your thoughts, sir?
Quite agree with what Pallavi said, that on-lending is probably easier, faster, and you have a much better control of credit policy, what kind of segments you're going after, and because the lender is going to look at the overall cap structure of the NBFC because it's a on-balance sheet arrangement. Vis-a-vis co-lending is a long-term partnership.
Okay.
Ultimately, everything has to be jointly done, whether it is last loan, policies. But in terms of because a lot of these loans, the servicing becomes an issue. And in a co-lending arrangement, as long as this partnership succeeds at a small level, it has a huge scalable potential. So definitely.
So you are saying it's the serviceability, if that can be taken care of, then co-lending is certainly.
Also, I'm
outscores.
Access to liquidity is an issue. We
No,
all know
that
that.
apart. I mean, that is a stated fact everybody acknowledges.
Yeah, and the other thing is what we have seen in co-lending arrangements, we have also seen more, variety of lenders participating, especially the PSU banks,
Right.
which have not been so active in the other areas before. So that way this opens up a larger pool of capital.
Okay. Your thoughts?
Yeah, the way I see this is that there is a bridge between savers to borrowers, and then to build that bridge, there are multiple roles that everyone will have to play, and then there are multiple phases. So there are strengths across this pipe, right from sourcing to execution, which is underwriting, then including payments and distribution, and subsequently collections, and then servicing. So each one plays an important role, and depending on the kind of borrower and the kind of lender. So there are multiple complexities there. It is not mutually exclusive that we are talking about a corporate loan to a retail loan to MSME loan. They're all different places. So I think what we need to appreciate is co-lending is trying to bring in the marriage of strengths. There is one entity which is good at sourcing, underwriting, algos, data analytics, so on and so forth, and the other which is source of capital, risk management, cost of capital. So there are such other benefits. So bringing these two is what we have to see. It's not one versus other, but it is about this model allowing to collaborate, allowing ecosystem players. We should not just see about two lenders. So that's a view.
Okay.
Raman, just want to add one
please.
sentence. So if you ask a very harsh feedback, I would say that onward lending was a past and co-lending is a future. If that was not the case, last 20 years, India could have created so many big NBFCs. But barring big MFIs, we have failed to do so. There are a couple of exceptions, absolutely.
Absolutely. So because every balance sheet has its limitations, and that holds true. And also, there was a concern, serious concern, and rightly so expressed, that how leveraged can banks be and how much exposure can they take in one sector, that to NBFCs, which itself, as we say with the new age lending happening, the lines, the differentiation between bank lending and NBFC getting blurred.
Absolutely, and that risk exposure completely changes when you are lending to NBFC and when you are lending to end customers.
Fine, I think. So just for the clarification of the house, although I know people out here are extremely learned, because generally the co-lending arrangements which are working in the market, it's the sourcing as well as the collection, etc. is being done by NBFCs, for which they are obviously paid some fee as part of the structured agreement. So actually the primary contribution and role of the banks is to provide that funding. That is 80%. So although Hello. Am I here? Yeah, it's okay. So, although let me also say, I think this is one very important point which generally I've seen people missing out. If you actually look at the RBI circular, it says that in this arrangement of co-lending or the original co-origination, minimum contribution of NBFCs has to be 20%. So it does not say that you have to have a 80-20. You can have a 70-30, 60-40, 50-50, or even the vice versa, 20-80. I mean, NBFC share could be 80%. Although, practically, at least to my knowledge, whatever arrangements I have come across are all typical 80-20, right? So I think we need to keep that aspect also in mind. Now, let me dig slightly deep dive into it, right? While, as we all agree, and rightly so, there's been a tremendous push by the RBI, which was, the brainchild behind it, and also by the government. But still, co-lending has not really met the expectations as of now. There are challenges, there are concerns. The views are that on one hand we have the PSBs, on the other hand we have the private banks. If you look at acceptability, it seems PSBs are more ready to take it, but there are challenges. So I think that is where some of the practitioners, the people sitting out here who have dealt with such arrangements. So I would like to ask you to quickly now, 2 sentences, express the key areas where you think the challenges are really coming on. So I'll start with Bhavin.
So one, I'm sure is about technology and how technologically data is being transferred, documents are being transferred, and the relationship is being maintained. The challenges which I have seen over last 12 years, co-origination, onward lending, direct assignment, and now we call as co-lending, the challenges remain same. That whether the information are being transferred in a transparent manner or not, and both the partners' books are talking in the same way or not. I believe if that is addressed, a lot of concerns will be automatically addressed, and why banks are not getting aggressive exposure will not remain a big problem.
So you said it's the technology which is right now has some issues,
Absolutely,
right?
yeah.
So here is an opportunity for all the fintechs sitting here. Your thoughts?
So I think, first of all, I would like to comment that it's very early to really give a verdict on whether it has worked or not. We just got these guidelines in 2020. COVID happened, and we are still trying to build on to those guidelines. The good thing is that there is an interest and intent both from private sector banks and public sector banks to do co-lending, and it makes a lot of sense for fintechs and digital lending NBFCs like ourselves. The only challenge I think which we face is which we see is prevailing in the market is more on the alignment. I think once the mindset alignment is there, there is intent to collaborate, and there are right teams on both sides. The other challenges related to technology, how you can make things work, can be navigated. And that
So I
part
think
two.
that point Bhavin touched. So what you are saying, it's primarily a mindset.
It's not the technology only. I think it's the fact
combination
that we are,
of.
yeah. And also I would like to add, when I say alignment, what I really mean is when we are talking about, since the NBFC or the fintech partner is focusing more on delivering a high quality customer experience, irrespective of who the banking partner is, and banks are interested in the asset base. The partnership needs to be aligned in a way that we, as banks, we start looking at the customers as joint customers and ensuring that we are equally responsible for ensuring their seamless customer experience. From the partner side, that is the NBFC partner, the important thing is to maintain that compliances, regulatory norms, which really helps to, not raise any red flags for the banks, because I think that's the risk and the fear for banks to partner, to say if tomorrow an audit happens and RBI has any question, I would need to answer because I am the regulated entity, and of course the NBFC is also. So ensuring that the compliances and customer experience are, while individually they have expertise, they're also cross training and cross leveraging each other's expertise and learning from each other is what is the key to success.
So as you say, it's an issue of, apart from what Bhavin touched upon, the technology, that each of the players needs to actually own it up. Everybody, although banks may be simply providing funds, but that doesn't mean that they can just wash their hands off in terms of serviceability.
Absolutely.
They are equally accountable, right?
And so it goes for the NBFC as well, to ensure that they maintain all the right
Thanks.
requirements.
Monu, I'll have a slightly, because of your experience and that you come from sorry for saying it, like me, a traditional player, right? Not the fintech ones. But I think, am I correct when I say that today we find a major, although there are cases of private banks, but largely it's the PSPs who have entered into this co-lending arrangements, right? Yeah. So your experience, why is it so?
Raman, one small correction, that I think we are the most tech-enabled HFC in the country. So I would like to take that. Right. Anyways, so I think there are 4 phases of this marriage. Right. The first marriage is courtship. That should I marry this person or not? Right. That's the first one which happens. The second is you have an engagement, and then
sorry to interrupt. I think, but this courtship is even interesting because for the first time, PSBs are looking attractive.
Yeah, absolutely. Sometimes you go, okay. So the second phase is about understanding and policy alignment, which is there. Another angle which I feel with most of the banks is they are actually connecting co-lending with the retail verticals. It's not a specialized vertical in any bank. Right? They're assuming that, okay, you do retail, hence you have to do this, which I think a realization will come that everybody, private sector or public sector, have to have a separate vertical just looking at co-lending. Now, they're already running some thousands of crores or whatever, hundreds of crores they are doing. For them, this is it. So most of the structure, it's merging with the retail lending person, both in private and public sector. So that doesn't give the due importance, I think, and it takes a longer time. So they're not specialized teams to do that. And it's important during this time that the policy alignment and the other things have to be matched. Then there's a third phase. Third phase is when you start exchanging business, right? How do you onboard, and those teething problems come. So we are in that third phase. We're in saying, okay, how will it happen? And that's when technology comes in. So Irfan, other can make it easier to back and forth. There'll be a fourth phase, which is once you've done the business, audit side going on. Okay, as RBI audited, they said, okay, you have not done this, you have not done that. And I think there's going to be a fifth phase, the quality of the portfolio. I'm again saying, it is not just about onboarding and sourcing, it is about tomorrow money coming back. And how can the banks, if I'm on the other side, they can be sure that who are originating for me, are they investing enough in their everything to collect back also or not? That's why I'm saying it will take 1 year, because yes, you can onboard, policy is there, and if their policy was so good, that's the same policy they were also lending. Why do they have this thing? So we'll have to look at it.
I think you've made a very, very important point here, and that's connected to what just she said, is in terms of, and I think that's correct, because what we've seen, especially in the public sector banks and even in private banks, it's generally the retail people who are handling retail portfolio are given the charge ki, theek hai, tum co-lending bhi tum hi dekh lo. And those guys are absolutely clueless as to kya karna hai, kaise karna hai. I have also come across a lot of instances, and especially the company where I'm associated, we started the first co-lending arrangement with SBI. I think this was the challenge we had. And I mean, just to inform, it is sometimes some NBFCs have gone to the extent of hand-holding banks in terms of driving that cultural change which is required, right? Okay, Irfan, so your thoughts on this part?
I completely agree to what Mr. Ratra was telling today. But then one small addition is that the best practices across the banks are being noted, and I've already seen, including PSUs and private banks, of course, there is center of excellence or centralized digital verticals, or there was a circular around DBUs as well, wherein we are centralizing this because it is a different function. It's not the retail function. I think what he's trying to also say is, one, there is of course technology to be able to scale this. It is also has to be structured well. When I say structure, the org structure of both bank as well as the originator or fintech has to be structured well to be able to handhold this partnership and then enable that scale. So he's making the point around org structure, and completely agree to that. And then there is actually a lot of action that has happened across multiple banks, creating this COEs or centralized co-lending / securitization vertical / DBUs there. So now the underlying point that we are trying to make here, I'll go back to Bhavin's point around technology. What is the moot point that we are talking about? There are two institutions that are coming together, right? Trying to make sense of both the strengths that they have, right? But then to be able to scale this up, we need significant amount of transparency. What does it mean? Each loan, both of us are partners here. In the sense, both of us are co-lenders here. We need to know each and every contracts, control the contract, visibility, data on a real-time basis. It's no more once in a month I'll report and then you consume it. That's not what RBI is telling. You please be on top of that loan that you own, right? Both of you own this. That's what RBI is telling. And to enable that, because this is a program which is a no-brainer on paper, on Excel sheets, it is a win-win to both sides. But then to execute this, we need a strong infrastructure. What is that infrastructure? I think the rails, the technology rails that he's talking about is the answer. How is that information flowing through both systems and then they are in sync? Because at the end of the day, the consumer, the customer or the retail borrower, or even for that matter, enterprise or corporate borrower has to have a single piece of SOA or any kind of experience. So that experience can't be compromised. So for that, I don't think there is anything other than execution. And then first and foremost thing that we need to do is technology, org structure, and then she also talked about alignment. Alignment could be at policy, people, and processes, and so on and so forth.
So I think Irfan and Bhavin, a lot of fintechs sitting here will love you, right?
Bilkul, sir.
Your thoughts, please.
I would just say that it's too early to make a judgment. The way we see conversation going around banks.
Sorry, you're sounding like someone in the TV debate.
No, I'm just saying that we have seen evolution of direct assignment loans also. In 2005, when the securitization circular came, we all saw the evolution of the industry. Right. I guess this is one of the best possible way to use the strength of both the parties. Good thing is we have seen, as I said, a variety of lenders coming on board. So I don't think anybody is like, when we talk to banks, everybody is open to it. That's the first step. Okay. Now, once they go through one portfolio cycle, which is where the comfort will happen more to scale. But I also want to add is that, in the way, having worked in banks for almost 15 years, there is a quantum of business also they have to see. The moment it crosses a threshold, that's when all of this happens. Then the targets will get defined, and the teams will happen, and then the business will scale up. I think we are getting into that zone. Probably another, I would say, 9 to 12 months, we'll see probably a very different picture, what we are talking today. But building blocks are falling in place. Tech is being done at a very fast pace. Most of the banks are open towards it.
Right. So I think, and you touched upon the variety, and if you look at future, so what next? Now, you would know when the first circular which just came in, RBI had restricted this coordination only to NDSI category of NBFCs. Yeah. So we at FIDC, Meshbhai sitting here, we really lobbied hard. And finally, they agreed to extending it to all NBFCs now. So similarly, on the other side, do you think there is a case of also including, say, small finance banks, cooperative banks, or the RRBs into it, and even extending the discussion further, since there are already a lot of on-lending arrangements happening with financial institutions like SIDBI and NABARD. So can we think of having co-lending arrangements involving these institutions as well? So this is, I think, one So a question I would quickly like each one of you to share your thoughts on.
So, sir, I feel that we are trying to address lending ecosystem issue here. That there is a capital lying somewhere, there is a demand lying somewhere. We are unable to match them up. If we have to match that, we have to keep the ecosystem completely open and transparent. The problem is when we allow certain entities and when we don't allow certain entities, then probably we are trying to block the flow. So better than going with a certain type of entity, we should first try to create a complete ecosystem, and then probably, even if it is 6 months or 1 year later, we should try to execute in that way. Why I am saying so is I have worked with NBFC in the consultant role, as an employee role, and now we are providing capital to NBFC. So I have played all three roles, and my understanding says that if we be in one block, then probably we will never be able to address this issue at all. At a one side, we have so much of capital lying with banks, but it is not being addressed to right borrowers. So if it has to be addressed, we have to look it as a lending ecosystem, then how I connect the
So
block.
sorry, I'm interrupting you. So you very much agree. Your prime point is that, okay, institutions don't matter. If you have an entity which is flush with capital or funds,
Why should I
on
look
the
at
other
type
hand,
of
which you have,
entity?
so but let's go slow. That's what you say, one by one. Your thoughts, madam.
So, since you will ask that in the end, the verdict is from my side would be that yes, they should be included. The reason being, for SFBs, we work with few SFBs, more in a DSA structure because, of course, they are not under the ambit of co-lending. But for the SFBs, particularly, it makes a lot of sense because they are trying to go upwardly mobile. They have been erstwhile MFIs and trying to look at a new asset class. So definitely, just like the banks want to broaden their, segments or, go to different ticket sizes, lower ticket sizes, geographies. Similarly, for SFBs, it makes sense for them to get access to the MSME segment. For example, in our case, we do unsecured.
What about say RRBs or UCBs and say SIDB NABARD?
I'm commenting on SFBs primarily because we've touched upon them.
Okay.
But broadly, I think, to Bhavin's point, of course, we should broaden it, and why restrict it to a certain category? It does open avenues for them to, broaden their reach and also access to a newer pool of capital for NBFCs for sure.
Your thoughts, sir?
I think it's a great idea. Actually, while you were asking this question, I think we could have multiple categories. Ultimately, what are we trying to do with co-lending? We're trying to have the credit reach to the last mile. That's the whole objective of this.
Absolutely.
And if we just keep on stuck with only the handful of banks, after the merger, the number of banks have anyways reduced. So I think it's a great idea. Taking a cue from you that we have the RRBs and the cooperative banks also allowed with a certain limit which is there, so that it reaches the local level also. Because we are at the moment discussing national level numbers. Ultimately, we are trying to solve a problem of this country, which is the credit to reach. So it would be a great idea because in the state, maybe the cooperative banks have much more depth than these banks would have, and their intent to drive this. This is a brilliant idea, and they could just limit that. Okay, you do this. Tier 1 and Tier 2 co-lending arrangements can be a great idea.
Patented, this idea?
Absolutely.
Thank you.
Sounds great.
Okay, Irfan, quickly, because I would like to throw the floor open also.
Sure. So in principle, it completely makes sense. However, what we have to consider is a set of institutions, RRBs/SFBs/CBs, NABARD. They are their purpose of existence or why they were created separately from not being a bank or NBFC is there. So as long as it is in the scope, right, and it is or augmenting that purpose, right? Why not? Right? As an idea, in principle, it definitely makes sense. It's about marriage of strengths. So it's there. It may not be called co-lending, right? Like Pallavi was talking about, SFBs were doing as a DSA/BC. That concept is there. Now you call it 100-0, 80-20, 50-50.
Doesn't matter.
It's a placeholder. Now, as
I think that can be a bilateral, kind of arrangement.
Right.
So the comfort.
And of course, one piece I want to talk about is risk. At the end of the day,
Obviously.
who can hold that risk? Which balance sheet can hold that risk, and what is the best purpose of that vehicle? Otherwise, everyone could be just a NBFC or a bank itself, right?
Your thoughts?
Yeah, I would of course agree with your idea, sir, because very simple logic. If the liabilities are going there, we have to basically find a way to deploy in assets. SFBs also have an advantage of being NBFCs themselves in the past. So they understand that side of the story quite well. Also, they are mobilizing fairly large amount of CASA now, deposits also. So definitely they should be allowed. It becomes quite easy to work.
We'll conclude here because I want to throw the floor open also. So primarily key takeaways, yes, co-lending is going to be the future. It's a marriage which should not end in divorce, certainly, because that is something, जीना यहाँ मरना यहाँ, इसके सिवा कहाँ जाना, तो वही बात है. And more importantly, while the starting has been made, and rightly so, there were certain restrictions. At the end of the day, the labels don't matter, whether I'm a SFB or a UCB or a scheduled commercial bank, whether I'm an NBFC, MFI, NDSI. That doesn't matter whether I'm a SIDB or a NABARD. Similarly, the ratios, it shouldn't 80-20 or 70-30, all these can be left, driven to, if I can use the word, market forces and the mutual comfort. So going ahead, that should be the order of the day, and we should hopefully see more and more. With that, friends, I throw the floor open. We have another 8 minutes, so I think we can have, I'm sure. Yes, Mahesh, please.
Raman, Mahesh Thakkar from FIDC. In fact, the institutions which you talked about, SIDB and NABARD, we talked with them to, do the co-lending with NBFCs. At the end, they loved it. But they said, you talk to RBI to add us in this category. Okay. So we are working on it. Good. But this will go, very soon it may start. Thank you.
Thank you. Thank you. Yeah, Rakesh, please. I'll come up to you, madam. Yeah, please. एक mic उधर भी दे दो. One this side, one this side.
So just a very brief comment. I think for co-lending to play to potential, what needs to happen is that the bank and the NBFC partner both needs to look at it as a joint venture and not as just increasing asset base from the bank's perspective and just a funding source from the NBFC perspective. Okay. Because once you start thinking of it as a JV, then you are saying that there will be a common visibility of the client journey, data transfer, everything, so that all the long-term sustainability issues of scalability will get addressed, including alignment, technology, everything that we discussed.
You are echoing what the panel said, and as it was said that both entities need to owe it up. Everybody has a sense of responsibility. Banks cannot just say, okay, paisa de diya, everything else is NBFCs, because they are collecting, they are sourcing.
Terminologies have a lot of power. So when you call it a joint venture, it covers all of this aspect. Thank you.
Thank you. Yes, madam.
Sir, the customer segments that NBFCs and bank cater.
I'm sorry, can you please introduce yourself quickly?
Yeah, I'm Nidhi Singhania. The customer segments that NBFCs and banks cater, that are altogether a different customer segments. And underserved or the banking is not there in case of NBFCs or less banking. So what are the challenges in arriving at the common policy?
Okay.
Because there will always be banks have a more
would you like any person specific in the panel to answer that?
No, anybody can answer.
Anybody take this?
Okay.
Please.
So you're absolutely right, ma'am. I think it's a very, very critical point here, because what NBFCs originally were meant to do was to complement what is not being served by the banks. And when you do this co-lending, they want you to do what banks do. Right? So this is a very, very spot on issue. I think this is again a slow process. We have been reasonably, I would say, as a housing finance company, have done a decent number. Till March, we had done about 1,700 crores of co-lending. So we're experiencing that. But I think it's a slow process, because for every change in their policy, it goes to the board and it has to come. But yes, this is a thing. And this is one more point what ma'am is saying, is that then how do you still remain profitable as a entity to do that? Because then pricing of that customer segment is also ambitious, what expectations are. So as of now, it's still in the works. It is work in progress. I think a slow process.
But from bank's perspective also, the customer segment is a bit riskier that NBFCs cater.
Exactly. So they are not agreeing to a segment which independently what you want to do. They are wanting what they want. So yes, there is a challenge in that side, but it's in the works. I think once the confidence builds and the learning is there, I think one fallout of this whole thing is going to be both sides are going to learn about each other a lot. And you could see after some point in time, the banks also say, okay, this is how to do, right? Absolutely. And they say, oh, I'm sure it's not that they're just stopping at what we are telling them to do. If they would be making amendments for themselves for good also. So we did realize we proposed something and they also changed their policy also, right, in general. So it's a very interesting thing. Good, it's a healthy competition, but I'm sure after 3-5 years, they'll also understand, oh, this is what you do, right? So, and this works. So
And I
it's
think
fair.
interesting observation being, and I think RBI as a common regulator probably could foresee that, and they were smart enough to do it to make banks also learn the tricks of the trade, right? Absolutely.
Just add,
Absolutely.
if I can just add to that, I think aligning on the policy is very, very important. So there is, absolute green channel, and there is, that was the fallback of the co-origination model, so that there is a complete clarity, and the CAM engines are rightly set up, and, the customer's journey is smoother, and the tax and the, is also justified in that way. But it takes time, and I think going back to the point that the panel was making earlier, that once the credit quality has been established, you have demonstrated that you can also bring the money back. You have robust systems in place, and a lot of education on banks need to know how well you are maintaining, how you are actually doing the scoring, what kind of data points you're looking. And once that alignment comes in, after running a few cycles, if the money is also coming back, I think the comfort increases, and the policy parameters can always be debated on and loosened. At least that's been our experience in doing this.
Any other question? Yes, ma'am.
My name is Archana and I'm from Yes Bank. My question is actually policy alignment is definitely one part of it, and it is the most important part of it. But when it comes to the implementation, now the people, the process, the practices, and the exact implementation of the same, that is a bigger challenge, because I've done few transactions, and what I have seen is the implementation. The practice they have followed, just a few examples, like how to read a CIBIL. In a policy, it is written a CIBIL score of 730, but how to read that complete CIBIL report is entirely different in NBFCs or with the banks. So it goes through the end-to-end process itself also. So how that transparency or the practice...
What you are saying is actually at the heart of what we discussed, the challenges.
Yeah, exactly.
And that's what everybody said. And I think we have to look at, as we said, we need to give some more time. Things as it's a marriage between two different institutions who were doing till now, because NBFCs would say we were catering to the unbanked, right? So the bank was different, the unbanked was different. Now we've married the two, so obviously there's going to be some issues, and the key is what you just pointed out.
Sir,
so shortly we'll see.
Just want to add
Yeah.
once. So see, as a bank, if somebody wants to say that you as an NBFC source the customer, but I'll do the business in the same way which I am doing, then it may not work. Because if you continue doing the business in the same way, you will never be able to reach out and fund these customers. So fundamentally, that has to be collaborative model, and I think JV is the best suitable word so that everybody can digest that proper way and execute it.
Right. Any other question? Yes, please. I think, just sorry, I'll go some. You can be the next one. I'm sorry. Please. The last, piche.
Hi, my name is Kailash Rathi. I just wanted to understand, as the RBI coming with a new digital fintech guideline, if co-lending can be introduced there also, which can be fintech with NBFC. As fintech is very agile and NBFC is relatively more open, then co-lending framework can be really worked well, and banks can learn from that co-lending experience and then start implementing. That could be one of the suggestions from my side.
See, as of now, the lending can only be on a regulated entity balance sheet. So I think probably that is some time away. However, we're all waiting for that working group to become a guideline which will allow the fintechs to be much more responsible in terms of servicing the customer. Because, like the biggest value which fintech brings to the table is about data, handling customer experience, building demand. We are hoping that those things will get addressed so that, it will become more like a standard across all fintechs. However, balance sheet lending has to be on regulated balance sheets. At least that's what the thought has been for now.
And I think, to my mind, the expected guidelines on digital lending are probably not going to, if I can use the word, change much in terms of co-lending, if you say per se. Because here we are talking of two, as you said, two regulated entities, and now the consensus across the board is that why not restrict it to only certain banks and certain NBFCs, maybe all its regulated entities can enter into co-lending. So it will be more, the digital lending part is more on the operational aspect of digital lending per se. So I don't think it is going to make much change in terms of the conceptual or policy changes when it comes to an idea like co-lending between two regulated entities. So, but I think let's still hold our thoughts and wait for those guidelines, right? So quickly, one last question. This gentleman, please. So already we are overshooting. Yeah.
So afternoon, I am Debashish Banerjee again from Yes Bank. First time, I should admit, it's a very enriching experience to hear you all. My question relates to what Pallavi mentioned a little while ago, the transparency part. When actually, when in practical sense, when it comes to transparency, it seems there is some apprehension both from the bank's aspect as well as NBFC's aspect to share, things in totality. For example, to give an illustration, suppose an NBFC has a proprietary score model, okay, and if things are not shared about that particular score model, it will be a black box to the bank. The bank therefore insists on sharing the rules and all that stuff. So do you think the regulator should come up with some sort of a unified standard rules when it comes to transparency per se, like in terms of delinquency metrics, common delinquency metrics through which these two can talk together?
Okay. Anybody
Thanks.
else would like to say? Otherwise, I'll take it. You please.
Yeah. So at the end of the day, there are two institutions, and then that M into N could be M into N. So from that perspective, the policies could be anything. Having a standard policy or certain parameters will restrict the scale. At the end of the day, what should determine is the risk appetite, return appetite, and what can a bank or NBFC or co-lending partners can take. That should be the determining criteria, not a prescribed one of what can or cannot be taken. So that will actually be counterproductive in terms of giving a parameters in a box kind of stuff. So that's my view.
I think quickly extending the discussion, that will be getting into too micro kind of a regulating, because RBI is very categorical in terms of not getting into that micro regulation, and more at a broader level. If we are calling it as a marriage, for any marriage to succeed, such secrets don't work. Apart from what happened in demonetization. Yeah. Okay, so if I can check with the organization, can we have one more question? Do we have time? No? Okay. Thank you. So I think, I hope we had an interesting discussion. Thank you to all my learned panelists. I think it was useful for the audience. Thank you all.